All right. So now that you know how to map your market structure, you know what swing highs and swing lows are, you know what higher high is and everything else. Now it's time to talk about the zones. Remember we discussed what are legs, right? So this is an impulsive leg. When we are in an uptrend, the legs that are going higher, the waves that are going higher, the swings that are going higher, these are called impulsive waves. And once we start retracement, these are called retractive legs or retractive swings or whatever you want to call it, retracement. So these are impulsive legs, these are retractive legs, these are retractive legs. So the point of the zones is we take a box, we take our previous swing high. In this case, if we talk about these three legs, this high, this low, and the higher high, if in the context of these three legs, this will be our previous swing high, this will be our recent low, and this will be our higher high. So the zone would be, you would take the highest point like this, you will take the previous swing high, you will draw a box, and you will drag it to the low, the previous swing high to the recent low, the top to the bottom of the retractive leg. Again, previous swing high to the low, not something like this. Most of the people that start with this, they draw the zones like this: the previous low to the high, low to the high. No, from high to the low, previous swing high to the recent low, you take it from the high to the low. These are your bullish zones. Simple as that. These are your zones. We don't care what happens above this. You might have seen people draw Fibonacci, right? But I don't use Fibonacci's in this way. I use the zones because I will tell you in this in a moment. But these are your zones. And I use the GAN box, which you can find over in the Fibonacci section, and it looks like this GAN box. So if I draw this, and if I like go to the apply defaults, you will see something like this. But I use this. So let me actually give it a background as well. So I have 3 points. It's 333, 0.333, 0.5, and 0.66. You can like just go to there, put the levels, get rid of time levels. We don't need that. We just need 5 price levels: 0, 1, 0.666, 0.5, 0.333. That's all we need. You can play with the settings all you want, it's on you. But apart from that, that is only what I use. Now, why is this important? We have 3 levels in our zone. Why does the zone work? I'll get into it later on. But for now, all you need to know is from where to draw the zones. That is the higher swing high, the swing high to the swing low, the previous swing high to the low. That is your zone, and you extend it. Now you will see that price comes back when it retraces. It comes back in the territory of the previous zone. That is why the zones are so important. The price comes back in the territory of the previous zone, and then it has something in here where the buyers step in and they take the price higher. Now if you think about this, and let me draw all my zones. So from swing high to the low, price will come and test three types of these zones: the 333 level, the zero point 0.5 level, and the 0.666 level. It can obviously go further down, but these are the three main levels that we need to focus on right now. We have a swing high, we break structure. When the price starts retracing, we want the price to come in the territory of this zone. High comes here, bounces. Now we have a new zone over here. From this high to this low, price comes in, taps anything in this zone, 333.5666, can go lower, but in this case, we have it a perfect tap on the point 0.5, and we go higher. Then again, now that we have a higher high with a confirmed break of structure, this is our new zone. Price again comes in. Now this time it retraces a bit deeper to the 0.666 level, and then it goes higher to the point that again we break structure. And now this would also be our zone. This would also be our zone. This one, right? But you will notice that this time this zone did not hold, and we had a market structure shift. This zone did not hold. Market structure shift. Now, what do we have? Now, once we have a market structure shift and we turn bearish, we take the low to the high, right? We take the retractive legs. So from the low to the high, because we obviously broke the low, right? So we broke the low here, and we will take the previous legs, not not this one, not the impulsive leg. We will take the retractive leg, and we will again draw our zone from this low to this high. Now once we have the break of structure confirmed, we draw the zone, and we will notice that the price comes back either the 33%, 5%, 666, or it could go deeper as well, but generally it comes to zero point 0.5 or 0.333. That is the most important thing. And this is why the zones really work, because I'm just going to show it on you on the charts, but I hope that you get the point of the zones and why they are so important in the glitch trading system. Comes back up, zero point 0.5, goes back down. Confirmed break of structure, we have a lower low, we have a lower high, and we have a new low. So we take the retractive leg, right? So this was a bearish retracement, right? So we take the previous leg and then we put our zone. From where? In the bearish case, from the low to the high. In the bearish case, it's low to high, and on the bullish case, it's high to the low. Some of you already know Fibonacci's, and what you guys do is you take from the high to the low and then mark your level. So it's like 618, 786, whatever, right? But it's different on with the zones. You take the previous low to the high. I'm stressing this because people actually do get confused on from which legs do they have to mark their zones. So hopefully you understand where you want to put your zones. Now I gave you the theory, and now actually let me show it to you happening on charts. And you will be amazed by how easy market structure can be, and from where you can expect retracement to stop, and then we can go higher, like continuation of the trends. It's super easy once you start looking at the markets in this way. Trust me, it just changes everything. The way you look at the market, it just changes it completely. So let's go look at the charts and be ready to be amazed. Okay. Let's look at the 1 hour, or actually, yeah, 2 hour chart. It's good enough, I think. So we have the Bitcoin chart. Let me get rid of all of this trend line rectangles. Boom. Let me get rid of the brush as well. Okay, boys. Take anything. Let's start from here. I think so. So we have. Where should we start? Let's start from this point. Actually, go to the 4 hour chart and then we start. Okay. So some of this is not going to work, but some of this it's obviously going to work. But I'll try to show it to you so that you can understand the point. It's not a trading strategy, it's how you have to mark your structures. What kind of zones work, what kind of zones won't work, that we'll get into it in the later part of things. But for now, you just need to see it happening on the charts for you to believe it. Okay, so I'm going to take this high and we have this low. This low is validated once we break above the previous high, this high. Okay, so this candle, this 4 hour candle validates this high. So now I'm going to draw my zone, which is this. I select the GAN box. Let me actually do this. Yeah. So GAN box selected from high to the low, and you will see what happens. So once we break above this high, we retrace back to where? We retrace back to the 0.666 region. And then we continue higher. Okay? So now I have a new higher high and a new low. This is my protected low now. And this is my high, because from this low to this high, this is where a higher high came. So I'll take again the GAN box from where? The high to the low. From high to the low, and I just put this here. And price, what does it do? It comes and it reacts to somewhere. It reacts. From here, it does react, right? And then again, on some sort of like lower time frames, this is obviously not the 4 hour structure, it's something like 30-minute structure. But let me obviously draw it again. Let's say this is our zone, and you'll see price tap the zone, tap the zone, go high, go higher. Taps the zone, it goes higher. And then what happens is we do this, we had the low, we had the high. Okay, so this, from this to this, we break the structure, and now we have what? Our protected high, our weaker low. And from there, I'll draw the zone again. When the price retraces, it comes to the 33 level and then goes down again. And it just happens all the time. It just happens. You have to mark your structures right, and then you will see that price does this on every level. Obviously, it will fail in the examples, but once you understand more, learn more, you will see that it works more often than not. And again, from this high, because obviously this high and this, no, actually, this is not example. Forget about it. Take this point, right? So you have a high, which is broken, and you had a low. And again, if you draw from there to there, you will again see that what happens, price comes down, goes back up. And obviously it's not like we are continuing structure, but the point is that we just take the legs and we draw our zones. The point is zones. It could be ranging, it could be trending, it could be anything, but we just need a good solid zone to see where price could come, and we can potentially take a trade out of this zone, out of this zone. So again, I'll take this example. It's actually a zone. Nah, it's not as a clean zone. Over here, we broke this low, so we can take this, and you will see the price comes and goes down. Then we had this low. This one didn't retrace much, and we then obviously had this low. Now this is not the 4-hour structure, it's on the lower time frames, but you can see that it works on all time frames. From this low to this high, price comes back up, taps the region, and drops. And it happens again from this to that. Price taps 50%, drops. It drops first because you can see this, right? So it means the price went back below and then it went back up. So this zone worked. Now, our point is basically that we don't really need the zone to, just the price comes in this and it goes back up. The system, the glitch does not care about breaking this. We don't care about this. Our whole point of the glitch or the zones is that the zones give us a parameter. The zones give us a parameter. Oftentimes you will see that market, if it's not really trending all the time, it doesn't break lows and highs all the time. What you can see is that we have this, right? Now we come back up, we don't necessarily take this high. The market just reverses from there and we start ranging. It obviously doesn't always take the highs, right? Now, what the zones actually give us is that they give us a parameter to trade within. For example, let's take this point. Sorry, let's take no, it's kind of a range. Yeah, this is a pretty solid example of the glitch. So we had this point and this point. Now the whole point of the glitch or the zones is that it gives us a parameter to trade within. Now obviously we know that if a low or a high in this case, if this high is uh, cleared out, the structure shifts, right? So we obviously have an invalidation of the trend. The trend changes if this high is taken. We are bullish. So if we need to continue bearish, we need to do what? We need to protect this high. And this is our weak low. Why? Because we are downtrending. So this is our low that needs to be, this is our weak low. What do I mean by weak lows? When we are trending, if we are trending downwards, the lows are weak and the highs are protected. Why? Because in a downtrend, we make lower lows. So in essentially, we expect the lows to be broken and we expect the highs to hold. Hence why we call a protected high that, if obviously if the price goes above the previous high, the trend shifts bullish. And if we want to continue the trend, we have to take the lows out and protect the highs. Hence why this is obviously the target, but this is the target for most traders. We, when trading the glitch, we don't fucking care about this. Our parameters are the zones. This is our parameter. We just trade within this region. We trade within this region, nothing else. You can enter over here and exit over here. It's literally this. This is the most basic glitch setup. A1 to 1. Price comes in, taps the 50%, you enter at the 50%, your stop loss is above the high, and your take profit is the start of this zone. We don't target this high because oftentimes you'll see price comes down and goes back up and you can change direction. We only target the zone's end. So our stop loss is above and our take profit is below. Now, don't go and start trading this because you will fail, or more often than not, and then you'll be like, it doesn't work. It does work, but there are some things that you will learn later on. Now, going back at it again to give you further examples of the same thing. So this price action, we did actually see it in the previous video. So do it again. Draw a zone. You see, it taps the 66, goes back below. But since in this case the zone is pretty small, like the target is pretty small, the low is pretty small. But again, enter the midpoint and target the low of the zone. You will see this happen again and again and again and again, and this will work, and you'll be amazed by what sort of sorcery is this, but it's there and it works. And there is an example again. Break of structure, retrace back down till what? It obviously like went pretty deep, but what happens then is that it goes up. Then we have another zone. It just goes up, it keeps going up. This is sort of like a choppy structure, but this works. And if you can see right over here, what do you see happening? The zones, they always react. They might not send price higher like this, but they react. Taps this, gives an instant 1-to-1. Instant. And I'm pretty sure that this, because I was trading it, this came down and it went back up in hours. Obviously, this is a 4-hour chart, but it did happen. So this is like an example of zones. I'll actually take you to gold chart as well, because we trade gold as well, and you will see the same thing. So this is the 4-hour chart, right? What happened over here? Draw the zone. Price comes in, goes back up. Now, obviously, gold has been pretty bullish lately, but you know what I mean. So in this case, this is also a zone, and you can see from where it bounced. It already gave us a one to one. This is all we need. And if we look at from the previous ones, since we were trending downwards, now you can probably say that this is not a break of structure, but on the lower time frames, this candle was a body closure. It was a 1 hour closure. So this zone was valid on the 1 hour, and it worked out pretty simply. Like, I don't really care if the low breaks or not. All I care about is the fact that we reached this point. That's it. The parameters of my trading system that you will learn are just these. So hopefully you do get the point of why market structure actually works, and it just works in zones. You have a zone, price comes in and goes back up. Price comes down and goes back up. And it has, like, you can draw zones and you will see that 33, 66, and 50% levels actually just work. Again, from here to here, it works. And obviously these are internal zones as well, the internal market structure, which we will go in a while in probably the next video. So again, this just works. It comes back in and it goes away. Now, some of you would probably be saying that, hey, the Fibonacci's are pretty much the same thing. Yeah, I mean, yes, they are the same thing. But sometimes you just don't know from where do you want to enter. Do you enter 618? Do you enter this? Do you enter that? And where do you target? The problem is the target. Most of the Fibonacci traders target the highs because they want the price to continue in the trend. But the price is not always trending. It's not always trending. So the zones actually give us the edge to trade out of markets price action anytime, anywhere, without having to worry about the fact that if it's trending or not. It could be ranging and we would still be able to profit out of it. So I hope that you understand the zones, and we will actually learn about this more in a while once we go into the advanced sections. But this was the introduction to zones.